All right. Hello, everybody. Sorry for the slight delay. So, Jamie Satley here. It is December 5th, 2018, and this is the Midweek Strategy webinar with SB Trade Desk. So, before I begin, as always, please let me know that you can hear me and that you can see the screen. Yes, Marco. Amr, how are you? Good, good. All's fine. Good. All right. Good morning, Jeha. How are you? All right. So, let's get started. This is a great time to do a webinar. Market's closed. I like that because, well, FX is not closed, of course, but I'm not sitting here. A lot of times I'm doing this and I'm having to put through trades and everything for the hedge fund that I trade with. Amr says lots of nonsense these days. Yeah, it's been a interesting. It's been a tough year. I mean, um, you know, for the year, looking here at the stats, up 491 pips. Actually scratched out 232 in November and just took a loss on the dollar CAD. It's been, there's, I look back on the year and, you start to get into the end of the year here and kind of reflect on what's happened. And, we came into this year, I'm going to go on a little tangent here. We came into this year with kind of the idea that the dollar, we were at the end of the cycle, right? And all the correlations and everything have really broken down. But that's okay. We'll do our best to move forward. So I just want to start here real quick. We're going to go to DXY. So our long-term DXY chart, we can look at this all day, right? And we can say that we're at this fantastic resistance area, and we've been hitting it for seemingly forever, but basically since August. And look, the dollar, I mean, I think like all the macro stuff, right? The dollar has had so many chances to roll over. And I guess specifically with DXY, we'd be talking about the euro, right? And it just won't happen. It just won't happen, right? I mean, let's real quick. Let's go to some macro stuff. For the longest time, for a lot of the year, it was, we had the bond thing, right? So this is TLT. As most of you, know, this is the long bond ETF, and TLT, when it's going up, right, means rates are going down. We actually called literally the low tick on this, and what happened the last 2 days? Bonds have gone through the roof, right? If we go to, this is the actual 30-year futures contract. This is the chart from a couple posts ago, I guess Monday night. And, we called the breakout. It was nice. You get this huge surge in bonds, right? And we could still go a little bit higher before we get into an area where I think we could actually fail. And what does this mean? Well, rates are tanking, right? If I go to TYX 30-year yield, rates have plunged, right? 30-year was 346 down to 313 yesterday, currently 318, okay? 10-year, right? I know we've looked at this chart many a times, and we have this massive long-term trend line. For rates were going up, dollar was supported. It's obviously not just about the rates, right? With absolute rates with the U.S., right? You have to look at the differentials. So, I like to look at, of course, the German 10-year government, right? Well, what happened here? Their rates are going down as well. So it's not just looking at, US. You have to look at as well at differentials. Well, here is the German to US rate. We've turned up. Hold on here. Is this not working? Okay, so we started to turn up slightly. This is a weekly chart here, and the low in the differential was 4 weeks ago. Okay. Hold on, I'm going to bring a different chart here because this is actually quite important. All right. Okay, so the low, the differential was 4 weeks ago. This is a chart that I posted a very long time ago. Actually, I know I posted back probably over here and back in May because we were looking at this in conjunction with the euro, right? So if we compare euro to this, when we'd hit this trend line, we tended to bottom in the euro exchange rate. So back here, all the way back in May, right, I said, oh, we're probably bottoming because we're back on this trend line. Well, we did for a bit, didn't happen. So you can see all the seeds are there. Like we have this differential turning, it seems. Euro is hanging on this, excuse me, it's 200-week average, but it just won't rally. Okay, and I mean, how many times? I feel like I'm capitulating here, but how many times can we give this a shot and it just won't happen? You know, so what I want to do today is I actually want to let's consider an alternative. All right, and it's possible that I'm doing this at the worst possible time, and so as far as considering an alternative to looking for the dollar to finally roll over, right? But I do want to look at an alternative. It's important to look at an alternative. So for the first time in quite some time, I should say, we've got what I would consider a viable alternative to this larger dollar rolling over scenario. At the end of the day, I think it actually still ends up with the dollar rolling over, but let's consider price action from October, Halloween, actually. So what do we have? We've got a down leg, an up leg, a down leg, an up leg, and then kind of a mini down leg. This is an Elliott triangle, right? Contracting, triangle, and I say Elliott triangle because in an Elliott triangle, you get, your wave B high is usually above the origin of wave A. So let's zoom in and look at the subdivisions of this. 3 waves down. This is the tricky one because this, to me, clearly is an impulse, but this is 3 waves down. This is 3 waves up. This is 3 waves down. So maybe the triangle's actually here, okay? And this is A, B, C. We're maybe in a D wave, and then we get another E wave. What I'm saying is we have something to track for the, let's say, the potential to look at something else happening with the dollar. So we continue to hold, by the way, continue to focus on this 4-hour chart and the 200 average on it. Ty says, Ty, how you doing, man? I love your comments. This is great. Ty said, I hate talking fundamentals, but Trump is the only leader who's reformed the economy with tax cuts and blessed regulations. It's as simple as that. The dollar is going to soar as the rest of the world economies plummet. Yeah, I mean, look, I don't know. I don't like talking fundamentals either because we can, kind of start running in circles, and trick ourselves up. But let's focus on this price action here. So let's, for argument's sake, say that we have a bullish triangle, okay? A, B, C. If this is a D, the level that we need to watch, the level that we need to stay focused on, in my opinion, is probably 96.54, all right? Alternating legs, 618 is 97.30. I'd watch that for resistance over like literally the next day. And if we were to get up there and then have a 618 alternating, we're looking at 96, basically 96.60. So that gives you 2 levels, okay, to look at. We're going to map that out as essentially 97.30. We're going to throw that there. What we're trying to do is simplify things here and just have 2 levels that we're going to focus on. So we've got 97.30 and 96.60. This, to me, are the barriers for trade over essentially the rest of the week, right? We've got NFPs on Friday, so we're going to want to be aware of that. Whichever way we break out of this is the way that I think we go. So I do want to have an alternative scenario. If indeed this ends up being a bullish triangle and we break out to the upside, we're going to have a terminal thrust, right, from this tight consolidation, and that's going to give us essentially a lasting high in the euro, or in the dollar, and a lasting low in the euro. Now, all that said, it's still really difficult for me to want to turn bullish the dollar here for one last move when it's been rallying since February, but price action is price action, and we can't really go against it, right? So where could we possibly bottom? I just, again, I want to bring in other possibilities here. Where could we possibly bottom on the euro? If we haven't already, because I'm still open to that, okay? But we need to get, essentially back through, I would say, obviously yesterday's high. Hold on for a second. These are the lines that we've been working with. Okay. All right, so here we go. Okay, so what we want to do is we're going to draw the parallel off of this low all the way down here. Let's actually just get rid of this, jump this place up. Okay, so if we have some sort of a bearish triangle in euro, bullish triangle in DXY, then what we're looking at is eventually a low all the way down on this parallel. Okay, and that's going to be, at this point, about 110.60. Again, this is not a forecast. I want to get that straight. But I don't want to be surprised if we get a breakdown. And I want to know where the most likely spot would be for, a potential low in euro if we do get a breakdown. All right. And it's going to be on these parallels. All right. Now, there is a subtle divergence based on median line analysis, based on slope analysis, whatever you want to call it. And this is called a space, right? So what happens when you get a space? A space is when you don't go all the way down to the support line in a downtrend. You turn up before it. That's happened here, okay? The parallel off of the low from May, we bottomed on that in August, right? Back in November, we did not make it there. However, that's a slight behavior change. However, we have not broken any sort of meaningful resistance yet. So let's say, in summary, what we want to see is either a final breakdown into these parallels, which is going to be basically 110.60 to 111, or, and this is, I guess, from my, subjective contrarian dollar, bear euro bull point of view, I think it's pretty clear that the level to break above yesterday's high is a good spot, but let's just call it about 114.30, right? So through 114.30, euro zooms higher, okay? Until then, I do want to be aware of the possibility that we go lower. I'm agnostic on this at this point, right? I don't have a dog in the fight here. We're not long euro right now. We've tried to be long euro. We've taken a little bit here and there. It just won't work. You know, on one hand, I want to say that I'm capitulating on this whole thing, and that means that we're finally going to rip. So we need to have a trigger point, and the trigger point on this is going to be like 1430, okay? So pay attention to those levels, right? 1430 euro longs. Until then, be open to all kinds of possibilities, including a final dump, a final capitulation in the euro. And with that said, I do want to bring in some DeMark stuff, okay? So with DeMark, if you guys are familiar with DeMark, it's a method of, you know, Tom DeMark developed these indicators to try and identify turning points or exhaustion points in the market, right? You get a 13 count. That will attempt to identify capitulation highs and capitulation lows. Well, as it is now, as you can see, I'll get rid of some other stuff here. As you can see, we are on a 9 count right now, all right? Now, they don't always work, but they are good to know because a lot of times they do work, right? Actually helped identify a high all the way back in February. But you can see we've had, you know, plenty of decent signals, okay, on both lows, highs, lows, high. This did not work. And then we're on a 9 count right now. So I do want to be, you know, cognizant of where the DeMark indicators stand. All right. And if we were to get another dump, you'd have 10, 11, 12, 13, 4 more days kind of until you'd get 4 more down days until you'd have, you know, a possible capitulation low according to the DeMark indicator, the DeMark sequential countdown. So all that said, all we need to know is 1430 and basically 11060, 111. Those are the two levels. Those are the two triggers. Okay. So now you're saying, Jamie, you've been talking about this euro bottoming thing forever. Do you think that we are going to be going short the euro? That I don't know, and I actually don't think it's a great idea because let's bring in some other euro crosses. I published some of these last week, and we did get a little more downside, but let's look at, say, Euro Aussie, okay? With the Aussie move today, we are actually back kind of where we were, and we're getting a massive reversal, okay? So Euro Aussie, huge support. This is our channel from the 2012 low. We're looking at log scale. This is clearly a wonderful channel to follow. You've got simple trend line, but look where the center line is. Center line's been massive resistance since March, okay? And we've now come down to the 25 line on this chart. So maybe instead of trying to play euro dollar, maybe we're actually going to look at, you know, playing some euro crosses on the upside, non-dollar crosses, right? Euro Aussie, Euro Kiwi, even Euro CAD. So we zoom into this. Let's go to a 60-minute. Getting an impulsive move to the upside. I'd be looking at 55.20 on this as a potential level for Euro Aussie upside. Hold on here. Euro Kiwi. 5 down. I had written about 5 down over here on the 28th of November. Obviously, we got another push to the downside, but it doesn't change the count. It's still 5 down. It's probably even, you know, a little better now because you've got a full 5 down in 5. Euro Aussie chart's probably a little better. But Euro Kiwi, I'd be aware of the 200-week average down at 162. And then we've got Euro CAD. Okay, and obviously today's CAD move with Bank of Canada. Dollar CAD's going through the roof right now. And we've got this turning up above the 200-week average as well. And now breaking through this trend line that goes back to the summer, so back to June. So, maybe euro US dollar is not the best place to look on the upside just yet, right? At least up until 1430, get through there, and hallelujah, we'll go higher. But this is our corrective channel. We're getting right up to the resistance area. So this is, again, one of my favorite setups. You get up through here, then you come back and you look for support on this line. So EuroCAD might be the next spot we're looking, okay? Okay. So what about all the other evidence that says, the dollar is, topping or attempting to top? Dollar SEK, we still have this divergence in play, right? DXY is up at new highs up here. Dollar SEK's not. Dollar SEK's rolling over from this median line, right? This is a chart that been looking for to kind of get going on the downside. Again, it just is slow moving. It's not, not a whole lot's happening here. If this is a triangle, then the level we're looking at is alternating 618s. Okay, so on dollar SEK, pay attention to this level here, 889.77. If we get down to there and turn up, then we're probably looking at a triangle in dollar Swedish krona, which again would potentially mean that, we've got one more final thrust in the US dollar on the top side. All right, let's move on and take a look at, I want to look at dollar yen. We're obviously going to be looking at some indices here in a little bit. And I will go over, our regular, Aussie, Kiwi, CAD, all that stuff. So I brought this in yesterday, this chart over here. So we've turned up from, the proposed support. This is the year open, by the way. This is December, and dollar yen still trading at the year open. But we've got the A, B, C, D, E. Right now, I threw in a curveball yesterday to say the alternate. Right, the alternate is that this is A at a larger degree, and that the entire B wave is actually a triangle. Right, when this is A, B, C, D, and now we're rallying in E. And we'd be looking for a short up here. I've got the order at 1335. You can see a good horizontal level at 1338, right? Resistance, resistance. Support here recently, back on 12.3, which I guess was on Monday. And this red line is our old former supporting parallel all the way up, right? So to me, the trade here is to short into 1335. If you want to be, more specific, then I guess you can try to go for 1340. But what I would be aware of is that there are, again, there's two possibilities here. And frankly, I don't have a very strong opinion on which one's the right one. Want to be shorting up here, but you've got 5 waves up here. So it might be something like we pull back a little bit over, the rest of today and into tonight, and then we get another surge higher, right? So you can see 5 up, pull back, support around 1290 or so, and then go for another run up into the 1338, 1340 area, all right? But nothing's changed here in terms of wanting to be shorting up here at 1340, right? I'm going to leave that order in. Aussie just missed that entry last night. Had it at 73.65. Unfortunately, did not trigger. Would have been a great trade. We actually would have been. We're at the target right now. So this is a potential support area for Aussie. The more important level is probably going to be this parallel. Okay, you can see it was resistance back in October. Didn't quite hit the support here on November 13th, but we did hit it on November 27th, and then obviously we zoomed higher, okay? So that level is also going to be in line with our 200 average on the 4-hour chart. Now at this point, going to an hourly, getting a pretty clean impulse on the downside, right? So 5 waves down. If we do rally from here, and this is a level where we may very well get a bounce, okay? This is a decent spot. You can see the square root level, okay? Good resistance, back in late November. So would not be surprised if we do get a decent bounce off of this, but would be looking for a, kind of a lower high if we bounce from here. If we go straight down from here, then the trade is probably to buy into 72.20s, okay? So we're getting some decent levels, some decent two-way action in some of these dollar crosses. It's just the bigger picture, where's the trend, where's the move? It's kind of elusive. Right now, I'm not really having, I don't have a super strong opinion either way on dollar action, right? We look at some of these euro, crosses, euro Aussie, euro Kiwi, euro CAD. They look like they want to, break to the or turn to the upside after big declines. All right. Aussie looks like we could be trading 2 directions, right? If you rally here, you sell a rally. If you drop straight from here, you buy the dip. Kiwi. Beautiful reversal here off of the underside of the former corrective channel, right? You know what I mean when I say corrective channel. It's simply drawn off the highs with a parallel and extended off the lows, right? And then you're looking for resistance to the underside. And how long ago is this? It doesn't matter the fact that it was so long ago, all right? These things happen on all time frames, but we reversed right off of that level. So the obvious level to look for a bounce on Kiwi is probably going to be 200-day average around 68.60. You can see also I got the red line there. That means it's a high volume spot. Right here, 68.60, right? Below here is a break, and that's shorting down to 67.60 and maybe closer to 67.30 at this point, which is the old highs over here in late August. And again, if you get there quickly, your 200 average is going to be there. Ty says, can I get the Aussie for a photo? Absolutely, my friend. Ty, do you want this 4-hour chart, something like this? Hold on. We make it nice and there you go. How's that work? Let me know when you're finished. Kelly with a good question. Hey, with 2019 around the corner, will you be watching for the yearly low or yearly highs to be made in the FX pairs? Thinking considering the openings may be important. Oh, of course. And I'm glad you brought that up. Maybe we'll talk more about this, of course, as we get into the very end of the month and into early January. But yeah, I mean, when we look at, that's why I have these opens on the chart, right? So the best example of this, of course, was back in 2017 when Euro bottomed on the first day, trading day of the year. Yeah, Ty says lots of pairs correlating with triangles showing completion in the last week of the month. Absolutely, and that's exactly what we were talking about earlier in the webinar with the uh, with DXY and the euro, is maybe we do coil and maybe we do end up getting that final thrust to the downside in the euro and final thrust to the upside in DXY, in which case we would be looking at a final capitulation type of turn towards the very end of December or very early in January in the new year. Yeah, triangles everywhere. There are triangles everywhere. I see triangles. All right, so FX wise, that's pretty much it for me. This dollar CAD move. Let's actually take it out and look out a little further on this dollar CAD move here. Hold on. Ty says, do we have a holiday schedule? No, we don't. I mean, we don't, I don't really take too many breaks, I guess. But Christmas this year is on a Tuesday. So, we'll come out with stuff. We're obviously, Christmas Eve is on a Monday, Christmas Day is on a Tuesday. So, we'll be off that Monday and Tuesday, of course. But other than that, I mean, no, we don't really have a holiday schedule. But here's the dollar CAD weekly chart. Getting back up into very interesting levels here. Okay. 3460, 3470 is going to be a spot. That's the center line. Okay. From this channel all the way back to 2012. So 3470 is an area to be kind of aware of in dollar CAD, and I'll leave dollar CAD there for the moment. But yeah, BOC setting it higher today. Again, I do like that. My favorite setup right now is probably that Euro CAD setup. Right, get up through here and you've got an impulsive move after a pretty weak three-wave rally, in which case we're looking at a flat on an Elliott wave standpoint, right? So 3 up A, B, C wave means you're looking above 155.85, 155.90. Currently trading 51.80, so there's a lot of pips from here to there. Be a decent move to take part in. All right, let's go macro. I want to look at stuff. I want to look at some gold. We're going to look at crude. crude. Was there news that just came out or something? Because crude's moving around like crazy. You got the OPEC thing in Vienna this weekend, so crude's going to be in play. We've got the behavior change in crude, right? The big one as of really Monday. So you know how this was drawn. You just draw your regular fork with your first high, low, and high. And then what we have is we have extended parallels off of that, right? And that kind of gives you estimated support and resistance. And once you start trading off of it, you got something to work with. Well, we traded off of it for, a couple months. And what happened on Monday is we broke above it and then we found perfect support right on it. So I would pay attention to this still because, again, with OPEC and all that stuff going on, certainly the possibility of some outsized moves in crude oil. And what do we have here? We've got 5 waves up, right? If we do get another drop in crude oil, you're looking for support basically probably back near 51 bucks. And that's going to be the top of the parallel. And I'm not sure what the retracement is, but it's pretty close, right? 618 is 51.36. So we'd be looking for support down here. And I think that, you got $58 as big resistance for crude at this point, right? This is the weekly chart all the way back to 1986. And you can see how big that magenta parallel is, right? So $58 is going to be solid resistance in crude at this point. So this is a chart that you're going to want to have handy heading into the next couple of days and early next week because of the OPEC meeting. Essentially 58 bucks on the upside for big resistance. I'm thinking 51, 51.30 for support near term, and looking at essentially $47 as massive support, like critical long-term support. Ty, hold on for a second. You can see right there, right? Ty, how's that? Let me know when you get the picture, and I'll move on. Okay. All right. So hopefully you've got that, Ty. Yeah. Yeah, Ty, it does. It looks like a good buy. And let's remember too, seasonals, right? And where to find the seasonals on the website, just go to the swing page, the long-term charts page, and there's a seasonal link on the right side. And seasonals start turning up at the very end of December in crude oil. So, if we're lucky enough to get maybe 47.50, 47.60 by the end of the year, then hell yeah, that's going to be one heck of a buy in crude. Until then, still think you could get 58. But yeah, center line, blue line from 86 is a beauty. All right, gold. A lot of potential here. And, I don't like the looking at a chart and then making an assumption based on, making an assumption on one market based on another. But it is really difficult to see something like this and think that dollar yen is not actually quite bearish, right? I can put forth all these analyses and whatnot, but let's be honest, forecasting is kind of a bullshit game, right? No one can predict the future. We know that. All we can do is try to map out, at least in my opinion, is map out the levels and, put ourselves in good situations, right? Good reward to risk situations, minimize our risk when we can. And, with gold, this potential massive base and a massive 1-2. Can we continue to trade sideways? Of course, but the potential here is obvious, okay? And we're looking at potentially a series of first and second waves, where that means we're going to rip, okay? And we're probably looking up towards the 1290 area. The first level is going to be about 1260, which is the channel, which, you know, has been resistance, you know, back in October. But you get out of this channel and we're looking at the extended parallels from the channel. So that's 1287. Yes, Thai, gold and dollar can. Absolutely. But it's unlikely that gold and yen go completely crazy opposite directions. But hey, I guess anything is possible, especially given the breakdown and correlations that we've seen. But let's take a look. I want to show you. So here's gold, right? And we compare yen. We'll do yen dollar so we can see it. I mean, quite unlikely that gold, if gold breaks out, that yen, this is yen dollar, remember, not dollar yen, quite highly unlikely that if gold breaks out that yen is going to tank. In other words, dollar yen is going to go higher. All right. I mean, this is a pretty strong relationship. So when it comes to this gold chart, the major level to pay attention to, one, I like gold here. I think this is the center line here, came down, just about tagged it overnight. So you want to be watching this for the next day or two. You know, if we continue to bounce along this, this is solid support. And looking higher up to 1260. But nothing impulsive in the gold market can be called or, you know, claimed up until you get out of this channel. All right, let's look at some indices. Ty just had a question about the DAX, so it's a good time to look at indices real quick. So Ty, your question specifically is on the active head and shoulders and DAX with the shoulder holding below the breakdown. Right. So we're looking here, and this is the neckline. And maybe no market, you know, kind of is a great example of where we are than this, right? So yes, huge top, absolutely. Tie with all caps, as we like to say. That's yelling when typing, when you're using all caps, and it is. It's a huge top, absolutely, it's a huge top. The thing that people forget too is that Ty. Sorry, no, man, I like it. I like it. I like the enthusiasm. I was not bagging on you. I like it. So what people forget too is that huge top, absolutely. So you have to be a bear here. The alternative, though, is that we can't forget huge tops or huge topping patterns or huge bottoming patterns. You got to be prepared to go the other way if you come back above it, because in that case, you have a false breakdown, right? And in this case, too, we are on the corrective channel lows on the support here, So I'd be prepared to go either way on this. Now, near-term DAX, after the breakdown, you're getting a coil here, right? So like we said before, triangles everywhere. Yes, absolutely, triangles everywhere. And this is another one, it looks like, right? You're getting a tight consolidation, essentially since the end of October. So, you know, we're going on almost 6 weeks here on this consolidation in the DAX. And if we're going to complete the consolidation, what you're looking for here is probably a little bit of a bounce into this to make five waves, excuse me, within the consolidation. And then you're looking lower after that. So on DAX, I'd be looking at probably around 11,440 as kind of your critical resistance area. And maybe this helps us kind of understand the euro a little bit. The correlations go in and out here, but that'll let's call it 11,390, 11,440 for DAX potential resistance. Okay, at that point you want to be turning and looking on the downside, and that brings me to China. Mohammed, how are you? I do see your question, and we will definitely take a look at dollar CAD again. So China up into resistance. Kind of have to be looking lower in China here too. And that, a little bit goes back to Aussie looking to maybe sell a bit of a bounce in the Australian dollar, right? All right, let me get finished with these indices real quick, and then Mohammed, we will definitely take a look at dollar CAD. All right, so the NASDAQ has really been the one that I've been focused on the most, for good reason, of course. And where we're thinking, or what I'm thinking at this point, is that you will get some support down around 163.50 to 164. So I will be looking for support basically, tomorrow, right? Markets closed today in the U.S. I outlined those levels in last night's post, but just look for, a bounce around 63.50, 64, and your resistance area is pretty darn clear. It's just the low back here from October 11th and kind of stretches up a little bit to 68.55. So if we look at the NASDAQ futures, so don't have anything drawn here, but if we're looking at the NASDAQ futures, you are looking for two different spots, because I know some of the guys here trade futures, as do I. I know Chip trades futures. I don't know if you're in here or not, Chip, but that's kind of your spot right there, right? Amr asking, I saw a tweet yesterday on NASDAQ. Someone's asking if you were still short. Was this on the swing? Yeah, so this was just on a, I trade kind of like everything, right? So I trade futures, I trade equities, I trade FX. I guess because it started kind of as an FX service, the trades I publish are FX, but obviously I do comment and write about all kinds of different markets. So you can, feel free to ask about anything, okay? But on the futures, we're looking at basically 67.12 and a quarter up to 69.07 and 3/4, 69.44. So those are the two levels that I'll be looking at trading as U.S. trading resumes on Thursday. Okay. So we will go back real quick because I know Mohammed wanted to look at dollar CAD quickly. All right, Mohammed. So we're going to zoom out and look at the channel back to 2012. Okay. You see the center line here? We're looking essentially around 34.70, 34.75 for some sort of resistance. All right. Now, we also have to respect the potential for dollar CAD to kind of go nuts at this point on the upside. I say that for a couple reasons. One is because of, well, the fact that we've been in an uptrend, obviously, but the other one is the fact that Euro CAD looks like a great setup on the long side. Mohammed, I don't think you were here when we were talking about this earlier, but this is a setup that I think is super interesting. You can see that we're testing the corrective channel high right now. And if you get back above this, right, then we'll see if we can consolidate a little bit, and we'd be looking for this to hold as support. So my little artsy drawings here, I was saying if you do this, then let's see if we can kind of consolidate and find support on this, right? And then you go higher, right? That's just the corrective channel breakout setup. One of the best setups out there, but you can see we've already broken this downtrend line. We can make an Elliott case for a flat, right? 3 down into a low. Looking higher means you're going to take out this high up here at 55.90. Obviously, a lot of room on the upside there. The question is this going to be more Euro-based or CAD-based? We don't know the answer to that, so we might as well just trade Euro-CAD anyway. The setup's there. It's a good setup. I will say, too, if you do pull back from this move here, maybe a bit extended in the very, very, very near term, if we do pull back some here, be looking for support back near about 51.20, right, which is just the very well-defined trend line that goes back to June, okay? So a couple levels to watch there in EuroCAD. I know, Mohammed, you asked about dollar CAD, but I think EuroCAD is actually a bit more interesting here. Okay. Well, I have covered pretty much all I've got. Again, U.S. markets closed today, right, in honor of George H.W. Bush, 41st President of the United States. I believe the last time market was closed for a president's death was Nixon in '94. Ty with the question, do you adjust the time bars for U.S. closes on TradingView? Adjust the time bars, I do not. I've got, so if I'm looking at a daily chart, right, the closes are always going to be at 4 or 5 o'clock Eastern. So I guess to answer your question, the close is for me is and always has been and always will be the 5 o'clock Eastern close. So an hour after U.S. equity markets close, that's when you roll over, right? So I hope that answers your question. Oh, TradingView does it according to the feed you use. Right. So if I'm looking at the FXCM feed, it's going to be always at the 5 o'clock close. If you're looking at, I guess, the ICE feed, I actually think they do it a little earlier. I think you're right about that. But yes, I would always want to have it so that it's on the 5 o'clock Eastern close, an hour after U.S. equity markets close. All right. Okay, so that's it for me today. Thank you all very much. We'll have an update out later. And even though the U.S. markets are closed, but our markets are not. So we will have an update out later. Biggest thing here, guys, is let's keep an open mind, right? We always say that, but let's keep an open mind. We've got this triangle scenario potentially going on in Euro and DXY and all that. And look, I don't, want to be totally shocked if and when the Euro does try to break down. I do think it would be terminal. Again, that's what triangles are, give way to terminal moves. But we at least know where we're looking, right? We don't want to be surprised. Okay, other than that, Euro 1430 is where I'm watching, and that's about it. So, all right, you guys have a great day. Yep, fourth wave triangles. That's right, Ty. Thank you all very much for your time, and I'll talk to you later. Have a great rest of your week. Bye.